Today on Business Edge, we'll be doing things a little differently. For the next 1 hour, I'll take you through the conversation surrounding Africa's biggest economy launching an infrastructure corporation to bridge its infrastructure deficit. Benneth Joseph will join me after that to look at some of the numbers involved in that conversation. He'll also highlight how African economies are rebounding from the COVID-19 pandemic. It's also been an interesting week for the crypto market. Ola Atoshe, the CEO and founder of Coincoin Limited, joins me to look at what's affecting the market. We'll also look at Nigeria's market performance this week. The managing director, Trust Bank Capital Management Limited, Aziz Lawal, is standing by. And as we always do, we'll wrap things up with NC4 to watch. A few stories we have our eyes on to see how they develop. I'm Tolulokwe Adileru Balogun. This is Business Edge. Now to our first conversation of the day. Infrastructural development plays an important role in enhancing economic growth, improving living standards, reducing poverty, and contributing to environmental sustainability. According to a report by Moody's Investors Service Limited, infrastructure in Nigeria is significantly behind other emerging market peers, with about $3 trillion needed over 30 years to close the gap. This comes from Moody's first report on the country's infrastructure markets in 2020. There are many challenges affecting Nigeria's ability to address this deficit. According to the Vice President and Senior Analyst at Moody's Investors Service, Kunal Govindia, Nigeria faces additional pressure from a rapidly growing population. He said Nigeria's low government funding capacity and customer affordability have been weakened further by the coronavirus pandemic and unstable oil prices. Nigeria's government has to take steps to address this deficit in key infrastructure such as transportation, reliable electricity infrastructure, and more. In order to do this, President Muhammadu Buhari approved the establishment of the Infrastructure Corporation, a public-private partnership entity. Is this the answer to Nigeria's infrastructure issues? Let's see. Joining me is the chief economist of Streetnomics Limited, Gospel Obele, and he's going to be taking us through how this infrastructure corporation could help Nigeria or possibly not. Gospel, good morning and welcome to Business Edge. Thank you so much for joining me.
Thank you for having me.
All right, please check your audio. I cannot hear you. I don't know if you can hear me right now, but I think maybe your audio might be muted. Can you quickly check that for me?
Hello, can you hear me, please?
There we go. I got you now. All right, Gospel, let's get into this. Where does this concept of an infrastructure corporation come from? For many people, it's really the first time they would have heard something like this. So where does it come from?
All right, it just simply targets the need to ensure that some level of specialized development financing or infrastructural financing is being put in place to enable infrastructure projects thrive. To a very large extent, one of the major reasons why we haven't done well in infrastructure, aside every other challenges most of us are aware about, is the fact that infrastructure projects are quite cumbersome and they require a lot of funding support to successfully execute them. So this enables us to strategically bring a lot of funds in the pool and as well deploy them into targeted infrastructure projects. All right, and such that infrastructure itself can have its own financing pipeline and projects can be supervised and executed in that order.
All right, so projects will have their own funding. They'll also be supervised and, of course, done in that order. So let's talk about other countries that may have had this. Have there been other countries that have come up with infrastructure corporations or something similar in order to address their infrastructure needs or even bridge a deficit that they may have? Are there any countries that you know of right now that currently even have them in play?
All right, so what we have right now is quite an interesting dynamics because like I mentioned earlier, infrastructure itself is a major enabler, all right, for economic growth, for advancement, for mobilities, for exports, for many other things. So one country that has done very well in this space would be China, all right, and not just has it done well for itself, it has also extended its own platform, sort of, all right, as an investment mechanism for developing economies. So for instance, China has been able to break down its infrastructure corporation in quotes into different mainstreams. So you have a PPP arrangement focused on rail infrastructure. You have PPP arrangements focused on road infrastructure. You have PPP arrangements focused on many other different infrastructure pockets like that. All right. So that's just to tell you that we setting up an infrastructure corporation makes sense. But as we move on and as population rises and growth comes, or we may need to have some more targeted infrastructure engagement so that the nature of those engagements can be tailored to that particular infrastructure need. So for instance, having an infrastructure corporation is fine, but that may not be able to effectively create solutions, all right, targeted at real infrastructures, ports infrastructure, and road infrastructure and different kind of infrastructure that is needed. All right, so China has done well in terms of creating PPP solutions within different infrastructural value chains and all of that. And being the fact that that model has worked, I mean, we had a story one time where China is building over, I think, 16 miles per day, all right, in terms of road infrastructure. And that would mean that they would likely build the Lagos-Ibadan Expressway in 5 days, all right, since it takes about 82 miles in the sense. So that's just to tell you that some level of specialized financing, specialized skills, and specialized some targeted strategies are deployed through different PPP arrangements to solve infrastructure needs. So, but the InfraCo is a good place to start in this space. That's in the Nigerian context.
All right, so a good place to start, and hopefully we might get to the specialized level that you pointed out that countries such as China has. So how does this fund actually work? We'll get into those who have been hired to manage the fund and those who've been hired to advise. But in terms of the working arrangements, the nuts and bolts of this infrastructure corporation, how is it meant to work?
So basically, the way the fund works is such that, like I mentioned earlier on, infrastructure funds are very cumbersome. And in the real sense of things, we've over the years, we tried to plug in infrastructure under capital expenditure. When you look at the budget framework on a year-on-year. And over time, it's looked as though we've been joking around that because there is no way the current budget will be able to fund critical infrastructure projects. So it makes sense now that people are beginning to see this important gap and begin to find critical PPP solutions in that space. So what the InfraCo does is simply, how the fund works is simply that the fund managers can source for funds, just like a business, all right? Someone's trying to start a business and looking for investors, all right? So the brief is clear. We need to provide infrastructure. We need to provide real infrastructure and different kind of infrastructure. But then, we need to look for investors who will be willing to invest, all right, and provide monies for us to drive infrastructure projects within Nigeria. So that's how the fund works, pulling monies together and targeting them at different infrastructure needs and ensuring that the right supervisory processes are enabled or are in place, all right? And that becomes the beginning of better things to come, hopefully.
All right, so we have seen a focus by this administration and the one before, particularly for infrastructure development in recent years, to be on power, to be on railways, to be on roads, port projects, and pipelines. And the trend is expected to continue as Nigeria moves to meet the growing needs of its population in terms of infrastructure. But why are these the vital areas that Nigeria needs to focus on? How does this tie to basically the economy for Nigeria?
Yeah, these are the vital areas for now because, like I said one time, that the way the country is right now, things are so complex to a point where you cannot prioritize one over the other. And they've grown to become interdependent in the way they're being positioned to enable economic growth and development. Road infrastructure is critical for mobility, all right, for farm to market, all right, it's critical to enable ease of movement or ease of goods and services to a large extent. Rail infrastructure is very critical for ease of people. So for instance, take for instance the Lagos-Ibadan railway right now. You'll find out that a lot more people are going through that route than getting on the road. And that's simply because you can get to curtail the level of risk people are faced with the rail infrastructure compared to the road and all of that. You also want to look at port infrastructure and all of that. There's so much pressure in the Apapa port at the moment. All right, if we can enable the ports in Calabar, ports in Asaba and different areas of the Federation, we realize that it's a lot easier all right, to import and export and do business, and then having that as well as road infrastructure, it will be a lot easier to move goods and services across different ports. Then primarily also for businesses, all right, businesses are much more positioned, all right, to do business and then to export business better. When you have power and all of that, it simply means that people can produce and engage other factors of production without difficulty. Households also get to benefit a lot, all right, from good power supply, all right. One major thing is that you'll be shocked to see the numbers of how much liters of fuel or PMS the average household in Nigeria consumes, all right. So once power is solved, you'll realize that businesses and households can be more productive about how they live, all right, productive with work and productive with the quality of life that they live, all right. So when you add that to the fact that you have good road infrastructure, rail infrastructure, and all that, you're beginning to realize that economic agents, all right, would improve when it comes to the standard of living and ability to do more in terms of human capital and global competitiveness.
All right, before we take a break, I want to ask you, because numbers are very important in this conversation. Nigeria has a population that's estimated at over 200 million, with a growth rate of around 2.2% yearly. So we're adding to our population in an exceedingly fast manner that's outpacing the development of the country. Moody's says that the country needs to spend about $3 trillion over the space of 30 years in order to bridge the country's infrastructure gap. If there was no InfraCo, if an infrastructure corporation had not come into the picture, which will be specifically dedicated to this, to bridging this gap, how do you think Nigeria would have managed to bridge this infrastructure deficit? Or would we have managed it if this particular, I guess we'll call it a specialized vehicle, was not brought into place?
Technically, we would not have been able to. I mean, that has been the case over the years. All right, we've been trying to use the capital expenditure side, which is, by the way, less than 30% of the overall budget, if you look at it very well. We've been trying to use the capital expenditure side to drive infrastructure projects. All right, so we've actually done the wrong things for a long time in the past. So being able to reckon with the fact that, okay, we need some level of specialized funding for infrastructure, particularly because of its relevance, all right, and vis-a-vis the Nigerian population and the growth in that population now, it makes a lot of sense to provide some specialized development financing in that space. So if we didn't have that, we would have probably continued to move in that cycle of, I want to use the word ignorance right now, all right? We would have continued to move in that cycle of ignorance, thinking that budget allocations can solve infrastructure problems, which is also part of the reasons why the federal government have gone into some level of borrowing spree, all right, trying to gain specialized borrowing solutions, all right, towards capital expenditure on infrastructure projects. To be very honest with you, the Nigerian budget is very small in the sense of the size of the Nigerian budget. So we cannot really do much, all right? Even if our capital expenditure were up to 50%, we still cannot do much when it comes to special infrastructure projects. And at the pace of our growth rate, all right, population growth rate, we need to do way more, times 5, almost times 10 of what we've done in the past. For instance, outside the third mainland bridge in Lagos State, what other mass infrastructure project do you have running? You don't have any other one. And that bridge is currently, all right, it's overworking its presence. That bridge was built during the military era, when Nigeria was probably less than half of its population right now, right? So there's a lot of work that needs to be done, all right? And going toward this path is the best way that makes sense for now. My only concern is how do we lock this particular narrative with the current infrastructure concession regulatory council, all right? So this is not the first time we are having a PPP arrangement around InfraCo, all right? There is currently an MDA in that space, a regulatory council and all of that, and it's also PPP designed, all right? So how do we link what we're doing now to what we have before? Because we also have a habit of trying to introduce newer pockets of solutions and thereby disregarding, all right? So how do we link it up so that so that functions are not duplicated, so that revenue allocations and borrowings and all of that are not wrongly appropriated and all of that. So these are the bigger questions we need to answer as we go ahead, the level of synchronization and alignment in solutions.
All right, so Gospel, let's hold on to this. He's made mention of the fact that there are still questions, the level of synchronization and alignment, making sure that we can follow the Naira, follow the dollars, follow the money that comes in for this infrastructure corporation. We're going to take a quick time out, but when we come back, 1 trillion naira seed money has been put in to what is hoped will end up being 15 trillion naira. And aside from that, there have been a few people hired to manage this fund. How do they stack up? We'll get into that when Business Edge continues. Still with me is economist Gospel Obele. Now, Gospel, I want us to look into the amount of money and those involved in this now. So the government has announced a 1 trillion naira seed fund or seed money for this particular infrastructure corporation of the planned 15 trillion naira that they want to raise. In terms of the significance of what government has put in, what do you think about it?
I think it's a good place to start. The fact that it's a show of commitment and moving beyond just the big question of political statements or political will. So that's more like a seed capital that has been invested in by the government. So the big work would now be, how do we mobilize around the other quote-unquote amounts that are needed, 14 trillion in a sense. So, and that's a big question facing the fund managers and the transaction managers in a sense. So yeah, it's a very good place to start and a very good show of commitment. Then again, you want to also be able to, part of the pitch to investors or people who will be funding the remaining 24 trillion or the 15 trillion would be that, okay, XYZ amount of money has been vested in by the Nigerian government. So it's a show of good faith and commitment for investors and quote unquote, a good place to buy investor confidence in the sense. So it's actually a very good move.
All right, so it's just one of the steps that have been taken. We know that it was in March that President Muhammadu Buhari approved this. And the reason the conversation has really scaled up now is that it was announced that a number of people have been hired to run the fund. So you have Chapel Hill Denham, based here in Nigeria, AAA, which is a consortium comprising Africa Plus Partners, ARC Asset Management, and AfriInvest. Then you also have Salam InfraWorks and AIIM, a unit of South Africa's Old Mutual Group, while KPMG has been appointed as transaction advisors. What do you think of this group? How do they stack up in terms of the work that is being put before them with the Infrastructure Corporation?
I think I like the quality of selection. AfriInvest, primarily if you look at those who are based in Nigeria, for instance, you have AfriInvest and you also have Chapel here. That those are very two credible institutions that have done a lot of work in terms of investments and navigating that funding space as portfolio and fund managers. Chapel Hill is a bit more of a very strong brand when it comes to interfacing with global fund providers and investors. I mean, the portfolio they have speaks very well for them. I also like the fact that we have a mix of some fund managers from South Africa, being a fact again that it helps that level of positioning. Because when you want to think of how to raise funds, you also want to think of fund managers who can draw some level of strength, all right, and some level of value into the mix. If you look at KPMG on the other hand, KPMG is more or less like a global professional service firm, and they're resident here in Nigeria also. So you have that leverage in terms of connecting to global investors and fund managers. So I think it's a very good mix. The fact that all the fund managers and the transaction advisory managers doesn't start and end here. There's a level of leverage or engagement with the global investor community, and the kind of funds we need to pull for this is quite a huge one. So you need social capital. It's more or less a question of social capital than just you being able to manage funds.
Okay, so for those who do decide to invest in the Infrastructure Corporation with Nigeria, what do they stand to gain? Is this a profit conversation? What is it? What is in it for those who invest? Because a lot of people have been wondering, in terms of looking at what Nigeria offers, the potential is there for anybody in a market of over 200 million, but this is a very specific area of development that the country is focusing on with this fund. So if someone is to invest in this fund, what do they stand to gain?
All right, so on one hand, quite honestly also, the CBN has not been clear around what the nitty-gritty details are when it comes to the infraco. For instance, now, we do not know how many projects need to be invested in the next 3 years. There are not clearly defined KPIs or metrics yet. There are no, because until you can see that as an investor, you may not see the reasons to invest. There are also no clear, how do I put it now, advantage to invest that are being defined and straight out there. Now, just to say that that information may be available, but probably not yet made public.
Okay.
All right. So most definitely the fund managers have that information. Just the way data and information works, some information cannot be made public technically for some reasons. However, I also think that a level of consideration needs to happen in terms of we can make this funding mix a bit public, because there are some investors who are even who live and work in Nigeria and would be willing to invest, all right, especially if the returns are very good. And these are also infrastructure projects that would not go down anytime soon. But on the other hand, one critical ways that investors get to make their money back is, so for instance, if you look at the Lagos-Ibadan rail service now, it's being managed to a large extent, I think, by the Chinese company who deployed the solution. So tickets are being sold, and a lot of things are going on, in that space. So what happens is that, to a large extent, for a period of 4 or 5 years, all right, the company, because it's a PPP arrangement, so the private sector arm of the PPP arrangement gets a particular percentage of revenues that are being made from that service, that rail service in a sense. Then after 5 years, they can now probably hand them over completely, all right, to the government or to maybe somebody else who brings some level of capital to take it up from there. All right, so PPP arrangements work in different ways. So for instance, look at the Lekki toll gate. All right, initially, before the NSAS protest, we had cases where people have to pay, all right, to get across the other side. All right, so those are little ways here and there, revenues are being made to ensure that investors get back their monies or their returns. So we don't know what the situation is for this particular one, and that's because we don't know how many rail projects they're seeking to scale with this. We do not know how many port/road projects that the government is seeking to scale with, and what the metrics are. Until those information are made public, except they want to have some level of private investing involved in the process. But I know definitely the fund managers will have that.
Okay, so given the fact that this is a very grandiose, very grand scale endeavor that Nigeria is basically putting itself into, and we've seen that government alone cannot do this. Do you think the private sector is interested in investing in Nigeria? Does Nigeria remain a draw for anyone, whether a Nigerian who wants to invest their money here or whether foreigners who want to bring in their direct investments? Is Nigeria still a draw in terms of investment climate?
Yes, to a very large extent. And that's because I also play in the private sector space. And one of the things I've come to realize is, once there is value involved, all right, once value is on the table, and once there is a clear pathway for them to get their returns on investment, the private sector will always be willing to invest. So take, for instance, now, the isolation center during the COVID-19 pandemic, or / the COVID program during the COVID-19 pandemic. Yes, it wasn't so much of a high returns on investment thing. It was more of a trying to play into that space around giving back to the community and helping to partner with government, all right, to solve the pandemic issue and all that. But if you notice that the COVID program itself, all right, the arm upon which a lot of isolation centers were delivered, all right, was excellently delivered, was excellently done, all right. And if you visit any of those places, you realize that these are very wonderful, beautiful structures that has been put in place to scale, all right, engagement around that space. So that's just to tell you that when it comes to private sector engagement, all right, as far as there's value on the table and there is a high level of returns on investment, they would always be willing. The only problem they've had in the past is a situation where government wants to run the whole show, all right, and expects them to just bring in funds. Okay, they also want to be involved in not just putting funds on the table. They also want to be involved in the management of that process. So reasons why the government goes along to set up concessionary companies, all right, the concession companies, and then you have a PPP arrangement and you have a company birth out of that PPP arrangement, like what China has done to a very large extent. So yes, to a large extent, a lot of investors would be, for instance, look at China now. They're investing in almost every infrastructure project, particularly in Nigeria, Angola, and Sudan. And it's basically because they are high traction markets and they're very sure of a high return on investment in a sense. As far as it's properly managed, investors will be willing to jump in.
All right, very quickly before I let you go, Gospel, we've seen over the years that Nigeria, as you made mention of earlier, has really sustained a very meager allocation in terms of funding infrastructure in the annual budget. We simply cannot carry it on an annual basis, what we need to put into our infrastructure. And the country has faced challenges in addressing its infrastructure deficit. We have weak institutions in certain situations, governance frameworks, as well as a very low tax base. But these are issues that the Infrastructure Corporation will not deal with. It's going to face its main focus, which is, of course, getting funding for targeted infrastructure projects. But beyond that, there are issues that have hindered Nigeria from being able to fund its own infrastructure, at least to a certain level, not to this deficit we're seeing. How can those issues be addressed beyond the Infrastructure Corporation? Very quickly as we wrap up.
Yes, to a large extent, those issues are largely structural. Which again is another concern for me within the whole mix. All right. Excuse me. The only way you can scale the level of impact and delivery, all right, within this new one, the likes, even with or without the infraco, is to ensure that structurally, all right, the structural base of the Nigerian economy is really, really, really
solid.
It's delivered properly, meaning that structural deficits are closed, and it's pretty much solid. Another angle to this is that there has to be an increased level of alignment, all right, between the monetary policy institution, which is the central bank, and the fiscal policy institution, which is to a large extent the presidency and the executive arm of government. Another angle to this is that institutions who are responsible for delivering infrastructure and ensuring that all of the dynamics, because it's not just the infraco, right? There are many government institutions and MDAs that will be involved in one way or the other. Now, for those ones, there are big questions around capacity and how are these institutions effective enough, all right, to enable that process of infraco delivering its mandate, all right? So that's another part that needs to be dealt with. So, for instance, by the time these fund managers begin to do their thing and all that, probably there are some papers that need to be signed, some form of approvals that need to happen at the executive level of government. A lot of times, those things will go through probably the Ministry of Power, Works and Housing and the likes. Now, if those institutional players do not have capacity to drive at the pace and at the pace, intellect and depth, all right, through which the private sector does its own thing, all right, there will be a form of gap in executing and all that. So the federal government and the monetary institutions have to be able to align, right, institutionally in terms of capacity and effectiveness, and also introduce some form of checks and balances, all right, and then at the same time do a lot of citizen education, because one of the major reasons that why infrastructures do not really last long in this part of the world is the fact that the citizens who you create or you build these things for are not aware or are simply just uneducated or are illiterate in that sense, all right, to use this infrastructure for productive living. Take, for instance, now, during the time of Governor Bode in Lagos State, a lot of infrastructure projects, mini infrastructure projects were launched here and there. But just in the space of 1 year, you've seen that people have torn down those things, all right, and abused them to a large extent. So there has to be a lot of sensitization, all right, citizen engagement, all right, as we're rolling this out. So it's a cluster of many things that have to come to the fore at the end of the day, beyond just an infraco. Because even if you deliver the infraco mandate and all of these dynamics are not properly in tune, it's just a space of 5 years. By the time the private sector guys cash out on their returns and all of that, we may still be back to where we used to be, and the infrastructure will be abused and all of that. So it's very important.
All right, as much as we've gotten information in this conversation, I think there are also questions that we're looking forward to the government and those involved in the Infrastructure Corporation answering. Gospel Obele, thank you so much for joining me on Business Edge.
Thank you, Tolu, for the great conversation.
All right, we'll be keeping our eyes on it. We were hearing from the governor of the CBN, Godwin Emefiele, that it will begin, that is the Infrastructure Corporation, will begin operations by the third quarter of 2021. That's just a few weeks from now. So answers we've had, but also some questions have been raised. But this is also a conversation that involves some interesting numbers. We'll take a break now. When we come back, Bennett Joseph has some numbers for you when it comes to Nigeria's infrastructure deficit. Do stay with us. Benneth Joseph joins me now, and he has a few numbers that are important to the conversation around Nigeria's infrastructure deficit. Benneth, what are we looking at in terms of how much Nigeria has to do to bridge this gap?
Okay, so let's dive right into it and let's face the facts. Nigeria's current budget already suffers a budget deficit of about 5.2 trillion naira, approximately 3.6% of the country's GDP. The deficit is expected to be financed mainly by the new borrowings, totaling to about 4.3 trillion naira, 205 billion naira from privatization proceeds, and 709 billion naira from drawdowns on multilateral and bilateral loans secured for explicit projects and programs. The truth is, revenues have remained grossly poor in Nigeria, and the country has not failed to keep up expenditure rightly needed during the current fiscal atmosphere. With a revenue of 1.6 trillion naira as of June 2020, the Nigerian government still went ahead spending 4.4 trillion naira against a prorated budget of 5.4 trillion naira. This means that Nigeria spends at least 2.7 times what it earns, and more so, about 67% of the country's total expenditure remains allocated to personnel costs and debt servicing. And now, Infraco initiative is said to have a seed capital of 1 trillion naira to grow into 15 trillion naira in assets and capital over time. Quite honestly, I'm struggling to believe that the Nigerian government can pull this off. But it's a laudable idea. I mean, the focus of capital expenditure is expected to create a viable environment for businesses to thrive and stimulate economic activities. But according to Moody's ratings, Nigeria's infrastructure gap is estimated at about $3 trillion, which is 6 times the size of Nigeria's annual GDP. So there's already a major funding challenge in the face of the current fiscal imbalances. How will Infraco be funded? I'm actually very concerned. Are we going to engage in more multilateral and bilateral loans? But for all it's worth, Infraco is good for public-private sector partnership, and it's an amazing strategy to attract foreign direct investment. But does Nigeria have the right institutions to protect the initiative with our history of being unable to keep to contracts? Secondly, will the project exist on pillars that uphold public-private sector partnerships of additionality, commercial and economic viability, and development impact? I think Nigeria must get really creative, as revenue generation remains a challenge in the face of falling oil prices and economic contraction, especially as a result of COVID-19. That said, Rebound is next. I'll be with you shortly. Rebound begins with a look at the Togolese economy. The West African nation has begun processing cassava into starch. The new agricultural product marketing company in Togo has opened its factory in Kamina, 164 kilometers from Lomé, and is expecting to produce 50 tons a day in its push for a rebounding economy. Africa produces about half of the world's cassava, and while cassava is one of the most consumed crops in sub-Saharan Africa, it is also the second most important source of starch after maize. In Togo, the new agricultural product marketing company wants to make cassava processing the primary source of its income and become the largest employer of Togolese labor. Now we move on to some stories in Angola, where oil and gas regulator, the National Oil, Gas and Biofuel Agency, ANPG, has achieved an important milestone earlier in the week when it opened bids for its 2020 onshore licensing round. All of the 9 oil and gas onshore blocks in the Lower Congo and Kwaza basins received bids from a variety of oil and gas operators, a rare result in an increasingly competitive, investment-shy global environment. 45 proposals from 15 different companies were submitted to the National Petroleum Agency, totaling a proposed investment sum of over $1 billion for Angola's oil and gas sector. This initial bid round result demonstrates Angola's potential to continually attract interest from investors into its oil and gas sector. The ANPG, backed by promising data about its onshore estate, is seeking to replicate past successes borne by Angola's prolific offshore fields. The proposals also included considerable commitment to the development of social and community projects and the implementation of environmental protection measures to the tune of over several millions of dollars proposed commitments. Now, in Kenya, we see where an annual housing demand of 250,000 units with an estimated supply of 50,000 units, culminating in a housing deficit of 2 million units, or perhaps 80% deficit. The attractive incentives for private developers now offers affordable housing sector in Kenya, offering developers an opportunity to diversify their portfolios. Kenya's affordable housing drive under the Big Four agenda provides an opportunity for investors in Kenya as well as Pan-African professional real estate services provider. Kenya plans to spend at least 13.9 billion Kenyan shillings to drive the affordable housing agenda. This is meant to provide affordable and decent housing for all Kenyans, according to the country's National Treasury Agency. Housing affordability is a key challenge in Kenya, with many persons unable to afford to buy or build their own homes. And that wraps it up for us on the Bennett's Curve, a new addition to NC's Business Edge. And of course, we'll be here to bring you new perspectives on all the stories making headlines in the world of business. Tolulope, back to you.
Thank you so much, Bet. Thank you so much, Bennett. It's really good to see some signs of progress and positive news coming from across the continent as it has to do with the economy. We're going to take a quick time out. When we come back, we get into the crypto economy. This week has not been so good for the holders of cryptocurrencies around the world, and one major currency took a massive hit. We'll get into the details right after this. Now, Deutsche Coin, the popular crypto asset known for having powerful supporters, including Elon Musk and Mark Cuban, has plummeted immensely, with co-founder Jackson Palmer attacking the crypto industry. On the FTX exchange, Deutsche Coin traded below 0.20. That's actually 20 cents, with a daily trading volume of over $1 billion. Now, the meme coin is, however, up by 0.70% for the day, with a market valuation of about $25 billion. I have Ola Atoshe, the CEO and founder of Coincoin Limited, to explain the latest development. Ola, welcome to Business Edge once again.
Yes, Tolu, it's a pleasure seeing you again.
All right, we're seeing situations where cryptos are actually being influenced by individuals on social media or comments being made. And a lot of people are concerned. Why are cryptos so susceptible to being influenced by individuals?
Well, it's the very nature of decentralization, right? So we say, decentralization, the nature of the blockchain, everyone compiling and based on what they put in. There is a valuation to be had in the market. But what we're seeing is it's not entirely true decentralization. It's another form of centralization in that individuals who have a voice in the community are able to move the markets, a lot. So that sort of volatility, it really kind of in part, I would say it goes against the spirit of having decentralized tokens.
All right, so I know you would have seen the comments by co-founder Jackson Palmer, and he's now saying that the crypto industry is a scam, an industry that he has made money off of, an industry that he has, of course, brought about Deutsche Coin as well. Is he just hurt by the recent happenings? What do you think of his comments?
Well, most of the comments by, a lot of persons or personalities on social media, especially Twitter, and obviously anything that sort of goes viral very quickly, I would say we should take with a pinch of salt. So he may be, a bit salty about some losses he's wearing, and of course, is perhaps not happy about that and is choosing to lash out. So I wouldn't say the cryptocurrency industry is a scam. I would say it's in its infancy, and there's a lot more to come, from the industry. But it's in its infancy. There are a lot of changes coming. The regulators have been very busy of late, and of course, those of us in the space are doing everything we can to be above board. And the way I like to say it is work with existing financial institutions so we can move to the future together. That's how I see it. I know a lot of people don't share that view, but that's the view that I choose to have. Together we can move forward to the future. But again, Steve is, the chap, I forget his name now. He's entitled to his opinions, as is everyone else.
All right, so we've seen the market fall as well this past week. The whole market fell by about 5% on Thursday, and this has been a trend. We're trying to also see if Bitcoin can get back to those staggering numbers that had everybody's jaws dropping in late 2020. But in terms of the fall for the crypto market this past week, what do you think is responsible for that?
Well, it's really difficult to say exactly what's driving it. I mean, if you look at the Bitcoin chart, you'll see it bounces. It's kind of bounced off the 30K level, so the 30K level seems to be quite strong support. But for an instrument that doesn't really have that many fundamentals, if you look at, again, the chart, you can quite see that the slope, or the sort of, as it's called in the business, the head and shoulders, the shoulder on the right shows it's dropping quite significantly. And a number of people have called for a further drop to $23,000. Some are calling for $18,000. But that said, a lot of people feel that because it's bounced off the 30K level a few times over the past weeks, there's a good chance that it may now shoot off back to 38. But again, what are the fundamentals? Well, as I think we've discussed previously, a lot of people see Bitcoin as a store of value.
Yeah.
So I feel that, there are people who say, well, there's a limited amount of coin out there. Ultimately, volatility is a good thing. Every time it drops to 30, you have a lot of people piling and they buy. When it gets to 33, some people sell again. So there is a lot of people, a lot of activity of people trying to, take some profit. But again, when it drops a little bit more, you then have more people piling. And of course, with each day that goes by, there's a lot of speculation, from the industry of more and more, fintech companies and tech companies getting involved, with Bitcoin. So,
Ola, I think you've heard the same rumor I've heard, but I'm not going to ask before some people run. But we will continue these conversations and we'll continue to see how the market plays out. Ola Atoshe, thank you so much for joining me on Business Edge.
Thank you.
All right. And we'll be touching base with Ola Atoshe and others, of course, in the crypto markets as we give you Crypto Watch, making sure we're letting you know how it's playing out in that area of the economy. We're going to take a time out, but when we come back, we'll be wrapping up the show. We want to touch base with the Nigerian markets in the past 1 week and also give you a few stories we've been keeping our eyes on. Do stay with us. Business Edge is wrapping up right after this. Now, the Nigerian equities market closed red on Thursday following sell pressure on the shares of consumer goods sector. Market capitalization dropped 3 billion naira to close at 19.79 trillion naira from 19.732 posted on Wednesday. The all-share index lost 5.65 points to close at 37,866.90. The month-to-date and year-to-date losses were 0.1% and 6.0% respectively. Aziz Lawal, the managing director of Trust Bank Capital Management Limited, is up now. Aziz, let's look at what's going on with this equity market. It closed bearish on Thursday. What do you think was responsible for that?
Good morning. Thank you for having me.
Good morning.
Yeah, likely yesterday's loss was driven by losses in Nigerian breweries, and Dangote Sugar, BNH, and Guarantee Holding Company. I mean, the good thing is that gains in Fidelity, Ohando, and Zenith, and UBA, they countered the impact of those losses, leaving the market with a marginal loss of 1 basis point. But generally, market sentiment was positive yesterday, and we expect that sentiment will be strengthened today.
All right. So we also saw the insurance sector seemingly making somewhat of a rebound. Sovereign Trust Insurance and IECO were performing quite well. Where do you see that coming from, and do you think it's going to last?
Yeah, the activities and movements seen in insurance stocks lately are driven by the recapitalization exercise in the industry. As a result, we will continue to see insurance stocks drift in and out of the gainers charts as investors continue to speculate on possible issue prices that these stocks are going to be issued for. So for insurance stocks, we'll continue to see that in the coming weeks. It's no big deal. It's more of the recapitalization exercise rather than fundamentals.
Okay. What is happening with the fixed income market this week? How has the performance been in that subsegment?
Yeah, a bit of the money market before fixed income. Sorry.
Go ahead.
Yeah, so yesterday we saw a surge in system liquidity. System liquidity closed up at about over 800 billion thereabouts. That's the largest we've seen since the first week in the year. So we expected that this liquidity will find its way into the fixed income market, specifically FGN bond market. But contrary to our expectations, activities have remained muted in the FGN bond markets. I mean, trading sentiment indicate that it appears market players are keen to take their bid to the FBN bond auction scheduled for Monday next week.
Okay.
Majority of yesterday's trades were consummated around 2027 trades and 2050 trades. So that's basically a summary of what happened in the fixed income market yesterday.
All right, Aziz, before I let you go, one sentence and one sentence only. How do you think the week will end? Markets have opened, and of course, we're looking to see how Friday will close things out, whatever trends we need to follow very quickly.
Sorry, I didn't get that question. Sorry.
How do you think the week will end for the Nigerian stock exchange, for the Nigerian market? Any trends we need to keep our eyes on going into the coming week?
Yes, I mean, the coming week is going to be a short week, but we expect the market to close stronger today on the back of the liquidity that came into the system yesterday.
All right. Aziz Lawal we'll touch base with you again to see how the markets are performing, but thank you for your time this morning.
Yeah, thank you.
Okay, we'll be wrapping things up on, I wanted to say on NC4 to watch, but actually that's what's coming up next. We'll be wrapping things up on Business Edge, so do stick around to see a few stories that we are keeping our eyes on. The Asian Infrastructure Investment Bank is making a fresh foray into the investment space in sub-Saharan Africa en route Rwanda. And this comes with a $100 million commitment, according to a statement from the company. Now, in that statement, the Beijing-based multilateral lender said efforts by Rwanda to increase access to finance for businesses affected by COVID-19 and build post-pandemic economic resilience received a boost after the approval of the $100 million loan from the bank. Number 2 on the list, the UN Special Envoy to Libya has warned that Libya's banking system will likely collapse if the country's 2 parallel central banks do not unify. Stalled political talks could also unravel a ceasefire. While briefing the UN Security Council, Jean Kubis noted that the division of the central bank, combined with a lack of a unified budget, led to both branches racking up debt to finance their respective administrations. Number 3 on the list, Fitch Ratings Agency says that the direct economic impact of riots in South Africa following the arrest of former President Jacob Zuma will be limited for the sovereign's credit worthiness. Now, it did explain that the violence highlights tail risk to social and political stability and could affect fiscal policy, including public sector wage negotiations, complicating efforts to stabilize the level of government debt to gross domestic product. And the 4 in NC4 to watch. Nigeria's treasury bills are experiencing an upward repricing on average yield as liquidity pressures eased on Thursday following the successful completion of the Central Bank of Nigeria's primary market auction on Wednesday. The fixed income market witnessed a slowdown in yield repricing in June 2021 as predicted by Atlas Portfolios. Key events that halted upward yield repricing were solid subscription level at Apex Bank primary market auction, disinflation and policy committee dovish stance on the Nigerian economy. And it's a wrap on this edition of Business Edge. Thank you so much for joining us. You can head to YouTube and, of course, download our mobile app on the App Store or Play Store to take us with you wherever you go. We are live on Star Times channel 274. I'm Tolulokwe Adilere Balogun. I will see you on Monday, bright and early, 11 a.m. West African time, as we talk business from around the continent, right here on News Central.